Welcome. In previous video, we have seen week 2 of December, how the market behaved. Now we will proceed for week 3 of December 2024. So the first day of week 3 is Monday, 16 December. So previous day was reversal day and it gave a big move. If you follow proper analysis, you can earn more on such days. So let's mark an important level. The PDL will be very important because it is demand zone also. This is like a support. A lot of this is strong buyer's zone because market reversed and it closed above the day's high. It took the first candle high as well, which was the supply zone from here to here. Now this top is of not much importance because nothing much happened on this top. So PDL is more important than PDH. Today's CPR is wide and it will be because after a long move on the previous day, the next day CPR will always be wide. Wide CPR means sideways or reversal day. Now let's see what happens here. First candle is a small body red and both side wicks. It's a candle with no significance. Like you can treat this as neutral candle, no trade on the first candle. Now first candle no trade, it is not on the supply zone also, so there is no trade unless the PDH is broken here, or even if the low of the first candle is broken, there is no trade because immediately there is CPR. So most probably from the first candle only the people with experience will say, they will analyze that the market is not going to do much today unless the CPR bottom is broken or this top is broken. So we will have to wait for those two scenarios unless there is no, because even if it goes from this point to this point, there is no trade because no trade inside the CPR. So today is like no trade day and you should analyze such day. Today means 16 December was a sideways day and no trade day. So again, now let's shift this for the next analysis. This is your PDH and PDL. Although we are changing the PDL, we will not change the this green zone, which is a strong support. It is called demand zone. So let's put this PDL here. The next day, now when there is a sideways day, next day will be narrow CPR and most probably it will be trending or zigzag. So narrow CPR on 17 December. The first candle could not break it properly, although there is a small red body below the PDL. This is not a breakout. The second candle also is trying to break the first candle. Okay, the first candle, if it would have been a proper red candle, the second candle is a good trade because it's breaking the high of the red candle. But since this is not a red candle, the second candle is not a breakout. So the third candle is again reversed. In this, this is the same scenario what happened recently. The first candle, second candle broke the first candle high and third candle reverse. So this is a must, like this is a high probability to go short. This can be treated as false breakout, like similar pattern I will show you here. What happened on this recently, we have seen that. Yes, here stay maybe, yes, this one. See here, first candle green candle, second candle has broken the first candle high and third candle has reversed, which is a false breakout. So similar pattern happened here. You should go short. If you are experienced, you know why market is doing that, you must go short here. Although there is pivot and all, this doesn't such kind of false breakouts are strong breakouts. There is hardly any chance of false breakout to fail because it is already failed. The breakout failed, that's why it is called false breakout. So you should go short here, short position, and then above the candle's high is your stop loss and twice 1:2. Yes, so this is your target. The second entry could be when this candle breaks the day's low or the first candle low. This can be treated as again false breakout from here. So now you can trail the stop loss. You can just put, like, once this candle is broken, then again next candle, this is broken. This is a big candle. So once your stop loss, once your target hits, okay, if you are out, the next entry would be for 20 MA retracement. This is a 20 MA retracement. This is a small body. If not this, at least this one. This you should go short here. Okay, above the pivot is your stop loss, not above the 20 MA. So the second entry will be here. See, when the market falls in one direction, there is the second entry is always along the 20 MA, either in the same direction or if it breaks the 20 MA. So I will show you how this is a short entry now, either here or here. So this is a better position to take above the pivot always, and when there is a pivot above the 20 MA, then only it becomes a high probability, not only 20 MA retracement. So let's take 1:2 risk reward. So yes, so here the second trade also worked, hits your target. Now the third trade, now you will say this candle, like 1225 candle, has reversed and broken the 20 MA also. Okay, in such cases there are two things why this is a low probability. First is it broke with a very small body. Whenever it is less than or equal to 25% of the total body, it's not a proper breakout. Second is it is back to back green candle. If this candle is after the red candle, then yes, then you can treat this. But when there is a green candle already formed and the second green candle is breaking this, then it's a low probability. Okay, because it is, this candle has given the momentum, second candle has broken it, but it's not a proper one. So third candle broke, again it reversed. Now this is your entry point. This is the perfect entry point because this can be treated as false breakout. This candle has broken the 20 MA, this candle has gone up in the momentum, and this has reversed. So this is like a trap. Go short here. Above this one is your stop loss, and twice the stop loss, twice the risk is your, twice the stop loss is your reward. So where is your reward? 2222. Yes, this is here. So whether this your target hits today on that day, yeah, very close. And even if your stop loss doesn't hit, you wait here. Okay, here you can get out. It's very close to your target. So this is like, jackpot. 3 trades worked in a row. Now let's see the next day, which is 18th December. 18th December, you have to check. This will be your low. This is the low. And okay, this is again intact. You can extend this, then where is the high? The PDH will shift here. Yes, and this is not only PDH now, this is a supply zone also. So how will you mark supply zone? Just mark like with the, this is your supply zone. This is marked with the red. Okay. Now let's see what happens on 18th December. Now 18th December, the first candle took the support at the PDL. Okay, now I will tell you how to identify this will work or not. Okay, this is, you can go long here, but I'll tell you it is low probability. Why? Because first of all, this is not a support or demand zone. The market did not reverse from PDL, so it cannot be treated as strong support. So this is just a PDL. Now second is, if you go long here on the first candle high, keep your stop loss. Twice the stop loss is coming in on the CPR in between your target. So this is a low probability. Second candle, then first candle. This candle could not break this zone, so there is no trade. Now there is a trade on this candle. Okay, you guys will say why there is a trade on this candle. I will explain two reasons. First is this is a CPR reversal pattern. CPR reversal pattern, you have to just go short here. Okay, stop loss either the day's high or above the central pivot. Above the central pivot will be big stop loss, so keep day's high till that point, and twice is your target. 1:2. Yes, this is your target. You should get out here. Now once market goes reversed at this point, this target is the second reason why you should go, because you see this, the after first candle, second candle, third candle, fourth candle, fifth candle, this range has formed. Okay, if I mark this with the box, this range has formed, and just fill it with say blue color. This range was formed, you see, and this candle, the 940 candle, this green candle has broken that range, and this candle has reversed, so this is a false breakout. Okay, and there was a chances, like suppose you are following, you know how market behaves or where is resistance with this pivot and CPR with your experience, you can predict here itself on this candle 940 candle that it is going to be reversed, because there is a strong resistance here. There is much less probability that it will go up. So a person like me or who believes in CPR setup, he will wait for reversal. And it's not that it will reverse that I will go short on this candle only, no. Unless the market gives you confirmation, no entry. There has to be a confirmation from the market. This candle closed here, this is a false breakout. Okay, this is, so there are two setups here, false breakout and CPR reversal. You should go short twice here, you have achieved your target. Now as I told you, this is a uh, demand zone. Now, but demand zone, but with confirmation. We cannot trade anywhere as soon as this market comes to demand zone, I will go long. No, you have to have a strong bullish candle at that. So where is the bullish candle? And today it will be low probability because the false breakout came from top. This is false breakout. When this false breakout happens, this false breakout decides the direction of the day for the rest of the day. But still you can check where are the possibilities. If you want to go long here on this candle 11:15 candle. Keep your stop loss and twice the stop loss somewhere on this top candle. You will achieve your, this is a small trade, but still you want to go. Then the real trade comes here. Now this one has broken this, the demand zone. So people will say that, oh, you can go short, but not today, because today's CPR is wide, so mostly it will be reversal day. And second is, there was a red candle here. If this is a green candle, then it is probability. Recently, just now, few seconds back, I told you, this, like if this is a green, then it breaks, then it's a proper breakout. But it is with the momentum it broke. First red candle is formed here, and then the second candle with the momentum it broke. And even if still you can't guess this, you can't know, and by mistake you have taken the trade, no problem. Take the trade here, keep your stop loss. As soon as your stop loss is hit, get out of the trade. So this candle has given the false breakout again. Yeah, this candle has given the false breakout. So you can go long on this one, keep your stop loss, and twice the stop loss is your target, which hasn't today it just remained there, because this is a strong support. So market did not break it or did not go up, it just consolidated at that support. So that's it for what 18th December. Now let's go to 19th. 19th December again. Okay, now this becomes a supply zone here again, and this is your PDH, PDL, PDL and PDH. So the more significant level is PDH. If something happens here, then we can trade. And even this CPR, this can be treated as virgin CPR. It's not a full virgin, it can be treated as partial virgin CPR because this candle is already there. So let's see what happens. This is average CPR. Market opened outside the range. Market opened below this. So in such days, you should watch the first candle. First candle is indecisive candle, neutral candle. There's long wicks on top, a short green body. So it's neither bullish nor bearish. So there is no trade unless the top or bottom, something happens at the top or bottom of the market. So you have to wait unless this level is broken or this level is broken or it is reversed. So there is no trade rest of the day. Look, this has just created like a box by the market, and the market stayed in that box for whole day. So there is no trade. Okay. Now what happened here? The interesting thing happened is this formed a gap border. So how we will mark the gap border? Uh, okay, I'll take this as here. So let's analyze Friday 28th. For the gap border, I will put a box. This is a gap border. Gap border has formed, and the color for the gap border, say, yeah, let us treat this. This is a gap border, and this is again a virgin CPR. Virgin CPR, how we mark? Generally, this is a virgin CPR, and let us mark with, say, pink color, light pink color. This is virgin CPR. This is pure gap border, and uh, PDH. So for this day, the PDH will be now. Let's mark the PDL here. This is PDL. Yeah. Okay. Now the market on 28th December, which is the Friday, there was a big red candle, first red candle, and broke the CPR. And this is this there is no trade on the first candle because it is in the range. Unless this range is broken either on the same day or the next day, there is no trade. Now what happened? This first candle is red candle, it broke the CPR but still within this range. Then second candle could not break the first candle low, third candle to kind of reversal, and this candle, this is 935 candle, it has it has broken the top of the first candle and that yesterday's range also, but there is no trade. There are 2-3 reasons. There is a low probability. Why? If you be with me, like on the daily analysis, day by day, you will understand that how the same things are getting repeated. You look here, why there are 2-3 reasons. Because first reason is this is a long candle, this is a big candle, there is no trade on the big candles. Avoid taking trades on the big candle because you don't know where to keep stop loss. Stop loss will be below this pivot or below this gap border or below this first candle high or below this one or below this one, you don't know. So this is big candle, big stop loss, avoid such trades. second second reason for not going long is this is a parabolic. Look, one, two, three. There is no red candle or neutral candle after which this has emerged. So this candle is a result of these two candles momentum. This is called a momentum candle. This is not a breakout candle. So there is no trade on this. Then it has reversed. Look how huge this has reversed. So there is no trade on this candle also because this is a very big candle. where will you keep your stop loss? This is even reverse from here. And you never know, like, there is no confirmation, like, okay, people will ask how we know that from here it is going to reverse. Is there any strategy wherein I can trade here and get this big candles advantage? No, there must be, but with a proper price action scenario, uh, as a follower of price action, pure price action, I don't see any um, reason or any strategy to go short here on this point. Maybe by fluke you can identify, but as a setup, you have to get a confirmation from the market first. So with this candle, one thing you can see that, yeah, it has given a false breakout from this candle and this. The market direction is, it is going to go down. That at least I can confirm. But this is not the place to go short. So where is the place to go short? Wait for the retracement. Okay, market. This is retraced. But is there really a good one? Yeah, you can go short, go long, go keep your stop loss. But still, I would advise to go short only when this is a turning point. Look, where is the breakout point? You should always wait for the breakout point. The top of the first candle is broken by this candle reverse, but you cannot go short because this is a huge stop loss. And you should wait for the retracement till the breakout point. This was the breakout point, breakout or false breakout point, whatever you want to call. Look, it reached here and then it reversed. So there is no trade on this green candle, there is a trade on this red candle because it is reversing from that line. So go short here. Now put a short position on this candle. Okay, short, keep your stop loss above the breakout point, and twice the stop loss is your target. Yeah, this is your target. This is how you know. With experience you will know that it will go further down. You can hold the trade, but as a setup, as a beginner, as a learner, always respect the market. Enter enter and exit at a proper location. So this first candle is red candle, then market reversed from this point, then again fell down, so there is no W pattern here. Okay, on this candle also there is no W pattern because this is a huge reversal and this is a huge candle. We cannot take W pattern is worth when you take a trade and the day's high will be your twice the, it will be more than twice your target, then on it is advantageous. But if you take the trade here, keep your stop loss, it will go too high, and your, because these highs, days highs are usually very strong resistance. So only trade with a proper risk reward. Now what happened, this day's low also is broken by this candle. So that with experience you will know that it is going down, but there is no proper setup to go short here. You can go short, but with the setup as in I told you, this will be low probability because this is a small body only broke this level, and moreover the previous candle is kind of red candle, so this is not, cannot be treated as a proper breakout, although it worked, but with the setup you cannot. Then today is not also a 20 EMA retracement day because it's not a trending day. So first candle was red, but it broke, it went up and then again fell down. So it's not a 20 EMA at all. There is a 20 EMA trade here, okay, on this one, 10-20 candle, but this is a low probability. If you are consistent with what I'm telling and listening, then you would have seen on the previous cases where this candle has broken the 20 EMA and then the other candle has reversed. Most of the cases, this red candle is bigger than the green candle. Then it's a proper breakout setup, or at least there should not be any support immediately because this is exactly closing on the support and then again it went up, and still you want to take a trade on this candle. There is a way that you should follow a proper risk reward. Your stop loss should be above this, above the break. the breakout line. This is the turning point. Then, so I mean to say, if you want to trade on this candle, so you just take a short position. Still it is a long stop loss and very big risk, so I don't encourage, but still you want to go short here, then your stop loss should be here and trade with a less lot or wait for some retracement to that level, near to that. So what will happen is, okay, go down, go down, go down, 1 is to 2, 1 is to 2, 1 is to 2. Where is 1 is to 2? Your 1 is to 2 risk reward will be, if this 1 is to 2 risk reward, yeah. So yeah, it is very close. Yes, it is actually reached on the same day. So you would have achieved. But big risk, big reward, fine. But if the risk is bigger, you always have a chance to lose that capital. So I don't encourage such, but with experience you can take. You do position sizing, means on such days you have less. If you are taking trading with 4 lots or 6 lots, trade only with 1 or 2 lots on such days if you are so sure that it is going. See, I will tell you, uh, I was very sure on this candle. As soon as this candle is formed, the rest of the day I knew it will close on the lowest point of the day, because that comes with like daily seeing the patterns, knowing how the what is happening here. Because you know what happens suddenly, this there is a big, like, big whatever operator or FIIs or big DIs or institutional participants, they sold here, and when they sold, like, market fell down, and this is such a huge thing that usually in such times what will happen again, people will try to sell and go in the same direction. They want to know the retracement part of it, so retracement happened here. Always wait for the retracement, you get a better entry. It doesn't happen that the big candle has formed again it will only fall. No, always there will be some retracement and market will give you another chance, so believe in that. So that's it, guys. I hope you are learning and follow a risk reward, follow discipline. Even within, this is not the game of like few days or even I will say few weeks or few months. You have to give few years to this and analyze daily, do daily, and it will obviously, it not all the 10 out of 10 times you will be correct. No one in the world is correct 10 out of 10 times, even a top professional or trader or anybody, including me or anyone on the um, this field. So it what is that you need to be a successful and profitable trader? At least a 50% probability. For that 50% probability you should follow technicals, so that even if you get a 50% probability on your side, you will be a profitable trader. Just follow risk reward and don't aim too high in short time. This is a game of consistency. Believe in yourself, keep following all the rules, risk rewards, and high probability setups. Trade only high probability setups. That's it, guys. Wish you all the best. Bye bye.